emphasize some aspects of our statement and add a little more. Inflation has evolved closely along the trajectory set by the monetary policy stance, with unfavorable base effects on the ebb and benign prices of fruits and vegetables and crude oil. The January 2016 target of 6% should be met. Going forward, under the assumption of a normal monsoon and the current level of crude oil prices and exchange rates, inflation is likely to be inertial and around 5% by the end of fiscal 2016-17. However, the implementation of the 7th Central Pay Commission Award has not been factored into these projections and will impart upward momentum to this trajectory for a period of 1 to 2 years. There are certain aspects of this Pay Commission Award that we can look through, however. The Reserve Bank will adjust the forecast path as and when more clarity emerges on the timing of implementation. Turning to the policy stance, the Indian economy is currently being viewed as a beacon of stability because of the steady disinflation, a modest current account deficit, and commitment to fiscal rectitude. This needs to be maintained so that the foundations of stable and sustainable growth are strengthened. The Reserve Bank continues to be accommodative, even as it leaves the policy rate unchanged in this review, while awaiting further data on the development of inflation. Structural reforms in the forthcoming union budget that boost growth while controlling spending will create more room for monetary policy to support growth, while also ensuring that inflation remains on the projected path of 5% by the end of 2016-17. Now, turning to other matters, in keeping with the government's Startup India initiative, the Reserve Bank will take steps to ease doing business and contribute to an ecosystem that is conducive to the growth of startups. These measures, which we'll announce shortly, will create an enabling framework for startups receiving foreign venture capital, will also allow differing contractual structures embedded in investment instruments, allow differing receipt of consideration for transfer of ownership, create facilities for escrow arrangements, and simplify documentation and reporting procedures, some of which are already in place. A detailed statement is being issued separately and should be available very shortly on the website. Now, over the last few quarters, the Reserve Bank has expanded the tools banks have to deal with stressed loans. We are now working with the government and banks to ensure that the stressed assets are recognized on a proactive basis and that bank balance sheets both reflect a true and fair picture and are adequately provisioned. It's important to note that provisioning prepares banks for possible loan loss, but if the loss does not materialize, it can be written back to profits. We've mapped out various possible scenarios to determine the extent of likely stress and believe they're all manageable. The Finance Minister has indicated he will support the public sector banks with capital infusion as needed. Our estimate is that the support that has been indicated will suffice, especially when coupled with other capital sources that are usually available to banks. Our various scenarios also show that private sector banks will not want for regulatory capital as a result of this exercise. Finally, the RBI is also working on identifying currently non-recognizable capital that is already on bank balance sheets, such as undervalued assets. The RBI could allow some of these to count as capital as per Basel norms, provided a bank meets minimum common equity standards. We're also monitoring the recovery process to make it more effective. Following consultations with banks and NBFCs, we will shortly issue instructions further fine-tuning the JLF and SDR process. Finally, we monitor the liquidity needs of the economy on a continuing basis. We will use the entire gamut of liquidity instruments, including overnight and term repos, as well as open market operations, to ensure that liquidity is plentifully supplied and the weighted average call money rates hug the policy rate.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.